Welcome and thank you all for joining this episode of the Crexi Podcast, an insider's look at all things commercial real estate. In this show, we cover a broad range of topics that cater to both CRE newcomers and industry leaders alike. I'm your host, Ashley Kobovitch, Regional Director at Crexi. And today, I'm thrilled to sit down with Nicoletti DePaul of the NNN Pro Group. Welcome, Nico.
Thanks for having me.
Of course. Before we dive in, a little bit about our guests. Nicoletti DePaul is the Chief Operating Officer of the NNN Pro Group, one of the top performing net lease brokerage teams in the country. Nico joined the NNN Pro Group in 2012 and oversees the company's day-to-day operations. Nico has structured and advised on the largest transactions in the net lease market over the past 10 years. Nico has a diverse financial and statistical background to accompany significant brokerage experience across various industries. Nico, welcome to the podcast.
Happy to be here.
Well, I know that we just went over a little bit about your background, but take us back all the way to the beginning. Where are you from? Where did you grow up? And how did you get your start in commercial real estate?
Sure. Grew up in New Jersey, went to school in the Bronx in New York at Fordham. Started in real estate when my now partner, Glenn Konofsky, kind of tricked me into not going to law school and following a career in real estate instead. I'd shown up for a internship interview. It's something I was interested in, real estate in general. And majored in business and finance and had a real estate class or two. Showed up for an interview. He had asked me if I was here for the full-time position or the internship. And so I just took it as an opportunity to say the full-time position. Interviewed, and almost about 12 years later, I'm still there now. Partners started as a junior analyst with the company with NNN Pro Group, so it's the only company that I've ever worked at full-time. And here I am today.
That's awesome. Funny enough, I actually got tricked into being into sales as well. So I was also from New Jersey. So I came into New York City for an HR internship because I went to school for psychology and got tricked in by the CEO and said, no, you're going to be in sales. So here we are, also almost 12 years later in sales. So welcome. It was a nice trick, I guess, for us both to be here.
Hopefully you're as happy as I am.
I am, absolutely. Well, tell me a little bit about how you then got started into triple net assets.
Mm-hmm. So that's all the company had focused on at the time. It was a much, much smaller shop. I was like the 6th or 7th person at the time. The business had been around for, 12, 13 years at that point. But net lease was all we had done, just on a much smaller scale. And Glenn had a vision for the business and the company and what he wanted to grow it into. And we just continued doing what we know best in net lease, and just grew the team to the 100-ish people that we are today. And just kept trying to take, more and more market share as we could, and just kind of bring new offerings, new product types, highly structured transactions, a lot of new ideas where we thought were innovative. And the space hadn't seen. And I think it served us well. It's gotten us to where we are now, but we're just kind of stuck with what we know best in net lease.
So that's lovely. So you kind of talked, you've been at the same role. Obviously, Glenn, I'm sure, has been very influential in your career, going from 6th or 7th employee all the way up to 100 now. I'm sure you've learned a lot of lessons along the way. I'm sure you had a lot of mentors. So talk to us a little bit about who some of the biggest mentors were and some of the lessons that they imparted on you.
Sure. Obviously, it goes without saying that Glenn's been the most influential on me. One, he's created so many things in this space that no one's seen, and he's the predominant person there for a very, very long time, and created the private marketplace as we see it today. So he's been the most influential just from the product type itself, sales, structuring transactions, different things, and then he's always just thought creatively about how we approach things and not just kind of doing everything status quo. Beyond that, it's when you talk about mentors, it means like kind of a lot of different things. I think one of the biggest things that's important at our company and in brokerage in general is a work ethic that really needs to kind of overcome everything because it's difficult, obviously. And so, just growing up, my parents worked very hard. My father still works very hard. So I think that's something that's hard to learn later in life. So I think that's obviously one of the most influential things. And then just different things. It's funny kind of how life works. Before this, when I was in high school and through college, I worked at a trophy store, which is an interesting thing to work at, and learned sales there and running a small business and different things. So the founder owner of that, who I worked very closely with at home in Jersey, was really influential too. And kind of everything's revolved around sales. And then there's a ton of people in the industry in general that, if it's at different private equity shops, or if it's at different REITs or whatever it may be, people my own age, people who are older, that I've learned from and have taken from. I like to think that I give back now the same way, but I've always embraced just trying to learn as much from everyone as possible. So just trying, I think I owe a lot of where I am today and the knowledge and everything that I have from more people than you can count, because I think everyone kind of contributes to your growth along the way.
Yep, absolutely. I think that anyone can teach you anything. I love listening to podcasts, obviously, doing them as well. But even if you pick up one or two things, you can always learn. Doesn't matter if it's from a 4-year-old or, an 82-year-old, there's something to always be learned and take with you. So speaking on some of those lessons, what were some lessons that you learned early on that have shaped your career and kind of become a core lesson or invaluable to your success?
Sure. Our business has morphed pretty dramatically over the last decade, more so over the last 5 years and even the last 3 years. We've become more institutionalized. I think our shop's a bit different too, in how we try to approach things. We have a ton of analysts. We have a ton of VP and MD level people in non-traditional sales roles. We think that we're kind of the benchmark for credit underwriting, real estate underwriting, understand the complexity kind of our space beyond just leases and real estate. And so learning along the way that we needed to have the right team around and function, as a holistic unit that could offer a lot of services beyond just trying to sell assets. And some of that stemmed from like 3 years in. We were working on one of the larger sale leasebacks that had occurred at the time. I've always been very good at math. My Excel skills haven't been as good as they should, and definitely aren't today. So I've made up for it with math. And I remember giant spreadsheets I've been working on for weeks, and then getting kind of to the last stretch of it and just messing something up by accident on a sort and like not realizing. And we didn't have a lot of people around me at the time from an analysis standpoint to double check. Sent it out, realized it was wrong immediately, fixed it within like 2 or 3 minutes, and it was to a large private equity client. And to this day, they still don't let me live that down. And there was like the brief, like 20 minutes before they're like, yeah, it doesn't matter. You already sent the revised one out, where I was under my desk and I'm like, this is my home now. I'm never going to leave here. So taking away from that, like at the moment after, and just Glenn and I huddling up, we're like, we need to, if we're really going to do this and grow it to where we want it to be and be viewed as kind of a premier advisor in the space and on par with how people think about consultants or investment banks or advisors or whatever it may be, we needed the appropriate team and infrastructure around that. And given that that was the scariest moment in my career at that time, it was one of the most pivotal to thinking about what it is we wanted to grow and, how we want it to be better. And we've employed that across kind of everything and how we're set up today and the resources we have and how things are staffed and just the level of, the level of care that we're giving our clients.
That's awesome. I think that you said a lot there. You can't make it to the top on your own, right? Mm-hmm. You have to put the team in place, and don't feel bad about your Excel or math skills. Mine are pretty non-existent, so I'm sure you're doing really well. But that's a lesson to our listeners that sometimes a mistake can be extremely pivotal and course correct into what you're meant to do. So always just, again, be learning ways based on, your past mistakes or from other people. So yeah, I love sharing that. Moving on to our second topic for the day, let's go into triple net leases. So NNN Pro, talk to us about that. Talk to us about current market happenings. So provide a little context to our listeners who might not know what NNN Pro is, how the team gets started, what goals and services do you provide for your clients?
Sure. So, like I mentioned, in its infancy, just a brokerage shop, as to what we think today is a full service advisory company. So brokerage and everything net lease, regardless of the product type, is specialists in the different product types within the company. But everything brokerage. So if it's the mom and pop side on buy side, if it's $1 billion sponsor backed or public company or founder owned sale leaseback programs, we're doing that and kind of everything in between. So groups that are looking for different capital sources, which is prevalent today, obviously. On the sale leaseback side, I think our group has done more than anyone in that space, and we've custom tailored more. But we put a tremendous amount of value on the fact that we service the entirety of the market. I mean, because they play into each other, the buyers and the sellers, and who's interacting with each other. You may have a multi-billion-dollar public company that's doing a transaction with a doctor in Arkansas who's buying something. And so it's important to know what each party wants and being able to service their different needs, because everything's equally as important regardless of the size. It's just that people have different goals and whatnot. And so we've structured the company where we think we have the right people in the different buckets to be servicing everything. So, if you have a property you want to sell, if you are trying to raise several $100 million through your real estate as part of your capital stack, on the company side, if you're looking to buy something and you want to get into net lease in the first place, we're doing all of that, and all throughout the country. The majority of our team's traveling on a very, very regular, consistent basis. I'm sure more than we all want to be. But seeing every asset, going to the assets with our clients that are on the buy side, making sure that we've had feet on the ground when we're selling it for our clients. And we've grown too, where we think we can service every single aspect of the market today effectively, which is the most important part. And so that's really what it's grown into. And we have people who spread out. It's easy to work remote today, obviously. We have our core offices, but we have different people in different states for where we need to be in different specializations. So that's what we're doing. I can jump more into the market if that's where you want to lead
No,
into.
that's perfect. And I think that's important. And a little bit of what sets you guys apart is you do have the boots on the ground. You do travel and see every asset and don't just use photos of it. You're there, the building as much as the owner does. So that really sets you apart as a firm. So appreciate you kind of sharing that with us. For some of our listeners that don't necessarily know what a triple net investment is, tell us a little bit about what the difference is in that space and maybe some of the pros and cons of it.
Sure. So, real estate's kind of an all-encompassing term, right? When everyone's like, what am I buying? Half the people are asking if we can sell their home and different things like that. So it can mean a lot of different things, and the commercial real estate world can mean a lot of different things. But net lease in particular, the easiest way to think about it is if I own a net lease property, I'm the landlord. The rent that I'm collecting is the rent that's going into my bank account. So if you own other type of commercial assets, or even if you own residential assets that you're renting or whatever it may be, or you own your home yourself, you're collecting rent, but then you have expenses associated with that real estate. So if I have a retail strip in the middle of Alabama, and I'm collecting $100,000 of rent on an annual basis, I'm going to have expenses. I'm going to have to fix the parking lot. I'm going to have to fix the roof. I'm going to have to, repair the walls between the buildings. I have my real estate taxes, I have my insurance. So $100,000 may end up being $20,000 at the end of the day. In net lease, if I own a net lease property, and I can talk about some examples, but if I own a net lease property and I collect $100,000, that's what's going to my bank account. Unfortunately, you always have to pay taxes, so that's going out. But that $100,000 is what you're getting. So the net phrase in net lease is referring to is net of all the expenses. And that's because in a triple net lease and an absolute net lease, the money you're collecting is what you're getting. So people view it as coupon clippers, mailbox money, things like that, and rent that's coming in. And then you have variations, as you do with anything. You have something called a double net lease, which means a million different things. It's just kind of an all-encompassing catch-all, where maybe you're responsible for just the roof and the parking lot, but everything else you aren't. And then there's kind of a million iterations, but where we focus on exclusively triple net leases or absolute net leases, because they're kind of interchangeable, it means the rent you're collecting, you don't have any expenses, you don't have any landlord obligations, is what a net lease is, regardless of the product type.
Awesome. And what are some of the pros and cons of that?
Sure. So the pros are, inflation valuable today, inflation hedges, right? Trash removal costs go up, taxes go up, cost of insurance goes up, repairs, if anyone who's trying to do construction on their home or anything else and they can't do it, or you're like me and you moved in 14, 15 months past when you were supposed to move in because the construction took too long, all those costs can go up. And so you have to look at it variably as to how much income you're going to make. You have to be working on raising your rent. Is it contractual? But the benefit of net lease is since you're not incurring any of the expenses, that's the money you're receiving. And the majority of net leases today, there's some exclusions obviously, but the majority of net leases today also have built-in rental increases. So the one piece of inflation and dollars being worth less today, you have some level of hedge against that while not incurring any of the expenses. So as a landlord, that's the best piece for you. And then as far as cons go, it means that there's some limitation as to how much it can appreciate. For the most part, it's going to be more consistent growth and more linear type of appreciation rather than exponential versus because they're usually subject to long-term leases with your tenants, meaning that the tenant's going to control it 10, 15, 20 years with those rental increases being at least scheduled in there. But it doesn't mean you can't buy a 20-year triple net lease asset on a hard corner that you think is going to, a suburb of Atlanta that's going to become the next big thing. You can't sell that 4 years from now for 10 times the value. So you lose kind of those big swings, but from consistent cash flow generating type of assets, it's a safer type of vehicle when you're making those investments.
Perfect. Thank you for that. That was very educational. So historically, how have triple net assets performed in down markets? And how do companies typically adjust operations? And how have owners or seeking investors pivoted accordingly?
Depends like anything else, right? So given that most triple net properties are subject to long-term leases, as long as the tenant can pay your rent, you can weather kind of where values go up and down, right? Because you can kind of sit through cycles because they're obligated to pay your rent. You're going through it. And so the risk associated with that is in a recessionary type of environment or in a down market, you're not looking just at down real estate market. You really have to look at the economy as a whole and what that means. And is this tenant going to be able to service the rent? You do that underwriting going up front. That's obviously where we think we're experts in what we're providing. But you're doing that underwriting up front to get comfortable with the credit, to think through what it might look like if you're in a different environment, what's recession proof, what's counter cyclical, where are you going to see that tenant is doing even better in a down market, things like that you're looking at. It's not without risk like anything else. The stock market's not without risk. But you don't, it's not the same if you own a multifamily building and it's an individual having to pay their rent. Typically a company's going to have better credit. And it's not a shopping center or a retail strip where subject to shorter term leases, the credits are smaller, it might be harder to go in and out. You're responsible for the expenses as the landlord. So as long as your underwriting sound going into, and there's always going to be exceptions, things happen. But if your underwriting going into is sound, it typically, because of the long-term nature, the tenant being responsible for the variable expenses, you typically are able to kind of go through cycles, which is what it's designed to do.
Right.
So long as you're underwriting those things, that's where it's to perform. But like anything else, values go down in a down market and values go up, but you don't necessarily need to sell because you're making the same money as if you were 6 months ago, 9 months ago.
Cool. No, absolutely. So as we're navigating the market changes and everything going on in 2023 so far and looking ahead, what are the most important things to consider right now in that market shift? So give us your 30,000 foot overview on where the market is right now, what changing is happening, what's most worthy of our attention, and what's just kind of fluff.
Sure. A few different ways to look at it, honestly, right now. I mean, part of anything being down, you obviously, from a buy perspective, want to make sure that you're going in at the right values. And there's always a bid ask. Sellers tend to hold out a bit longer, thinking the market's going to rebound. Buyers tend to think they'll get a better deal if they wait a little bit longer, right? That's kind of the nature of what we're dealing with. I think given kind of where we are right now and how many months have gone by, where interest rates are, which obviously debt's a huge driver of real estate value because most people are using leverage. There's some people who think that interest rates are going to come back down pretty dramatically. I don't subscribe to that. But some people think that's going to be the case, to the extent that we're call it flatter right now, or we're kind of getting around a norm. You're able to get better values from a buy side perspective than you could 6 months ago, 9 months ago, 12 months ago. So there's a lot of opportunity. You do, again, going into it, have to underwrite the businesses appropriately and who's paying your rent and what it is, right? That's kind of the biggest thing right now, not buying something that's riskier necessarily unless you're prepared to deal with that risk. It's really your appetite. But where there's a really interesting kind of huge opportunity on the buy side and even on the sell side too, for people who are selling their real estate, you have a lot of companies who have held onto their real estate for a very long time, who haven't been inclined to sell because debt's been so cheap and their corporate debt facilities have been so cheap, where you're having what is a lot of really good real estate product come to the market that historically no one has wanted to sell and there's no reason to. So there's a really good opportunity to buy a credit that you otherwise historically haven't been able to, and just what's good real estate. Because people are looking on the operating business side, on the private equity side, on public companies. They are looking to do a sale leaseback, so sell their real estate, lease it back to themselves, as a way of funding their business, funding growth, and continuing operations. Whereas they could borrow, their business debt at 2 or 3% not too long ago. Doing a sale leaseback and a buyer paying you 6 or 7% is pretty good relative to where debt is. And so if I'm a buyer, you obviously don't want to overpay for something today and it has to make sense. But there's in some instance generational real estate or generational credits that or brands or businesses that people have always wanted, that are coming to the market here. Some already are, but are coming to the market here kind of in the near future. That is a really good opportunity to get something you otherwise wouldn't be able to.
Sure. So elaborate a little bit about that. Are you seeing any differences across different asset types, whether it's volume coming to market, things selling quicker? Break down a little bit of that for our listeners.
Sure. Net lease is interesting in that it's never really particularly like, oh, this product type's coming now or this product type is coming, because people are just running their businesses the way that they're running them. But we are seeing a lot more sale leaseback product that's going to be coming to the market, and already is. And there's attractive yields relative to where they've traded it historically. And even if you think this is the new environment for the next few years before you see any level of appreciation, which isn't always going to be true for everything, the beauty of net lease is you're collecting those rent checks. You can be patient in doing that. So I don't think it's a particular product type. If it's restaurant versus tires versus oil change versus medical, animal hospitals, industrial, whatever it may be. I think it's just that you're seeing a lot of sale leaseback product come to the market versus, a developer selling a lease or someone selling a midterm lease, whatever it may be. So you have an opportunity to negotiate your own lease if you're buying, get the terms that you want, underwrite your asset. And so it's kind of across the board and across the spectrum of it. And we're seeing attractive yields for people, and it makes sense for the sellers.
Any advice that you would have for either younger brokers or younger investors coming into the market and how to navigate it right now?
Yeah. So from the brokerage side, now is a very difficult time. Like, it's difficult for the most seasoned brokers in the space, but there's a ton of opportunity in difficult times. I mean, even when, we're talking March, April, May of 2020 during COVID, we pivoted and went on the offensive and we're calling people and doing different things. There's a ton of opportunity in a down market, or what is going to be perceived as a down market. So the biggest advice, and kind of advice in general, if you're going to go into brokerage, you have to be willing to work nonstop. It's the reality of it, right? It's what you hear. And everyone says that they work extremely hard or what it is, but you're not making any money unless you're working really hard. Is the idea. Like, even today, I'm still working 7 days a week is the reality of it. And you have to do that right now in particular. So it's work hard and don't kind of don't fall for the trap of what it was the last few years where it was easier to do things. Like, this is where experts in their field are made, or this is where success is made, where you can work hard when everyone else isn't willing to do that. So that's the biggest thing. And I know that's easy to say, but it's not easy to do.
Yeah,
right. That's
sure.
an easy thing to say. It's not easy to do. And then on the buy side, don't fall for like every fad that's out there, like in anything else where people just throw their money into a get rich kind of thing. I know for new people investing, and kind of there's been a shift socially to trying to get these big swings like pretty early on. There's value in buying something that maybe has a 1 year plan or a 2 year plan or a 3 year plan, and investing and not putting it. But there's a lot of opportunities now, where I do think if you're willing to buy and hold something for the next few years, you're going to get that appreciation that's not typical of net lease.
So you're telling me I can't get rich quick?
No, unless you can figure out how to like NFT someone's sale lease back and then sell that for a bunch of money. But I don't think
goodness.
I don't think they figured that out yet.
I don't even want to get into that topic, but thanks for that. I appreciate it. So a lot of our listeners, the only way out is through, right? You got to keep going, keep doing the things day in and day out, have a plan and do those. What are some of your tried and true methods or things that you do daily, weekly, monthly? What are those kind of methods that people can take away from you?
I try to read pretty much as much as anything possible. I'm not talking about like how-to books and like real estate and things like that, but every kind of article that you can, things that aren't specific to real estate articles. If you know that you're focusing on the restaurant industry, looking at trends, looking at the cost of goods and what's driving those values and why they may or may not be making as much money historically, can they pay these rents, things like that. So industry specific things, articles, any type of financial event. You're selling real estate, but it's still driven by the economy and everything else and debt rates. So it's back to what we were talking about before, just trying to learn as much as possible from everyone, asking a ton of questions on everything. I still ask questions today. I still call people today. And again, people have been in it less than I have, or people have been in it more than I have. So trying to educate yourself as much as possible. And then beyond that is just sticking to your schedule. And if you say you're going to make X amount of calls that day, make sure you're making X amount of calls. No one likes to do that and get yelled at when you make a phone call. But if that's what you're going to do, and if you were going to database from 6 a.m. to 8 a.m., then that's what you have to do. I think discipline and like kind of regimenting what you're doing right now and just being the most knowledgeable is what's going to drive you, so that when a client asks you, or a potential client asks you a question, that you can actually answer. You're supposed to be advising them, not just trying to sell a property. So those are the biggest things right now, I think, separate kind of the good brokers from the bad brokers.
Absolutely. I think that accountability and that discipline, do what you say you're going to do it right, do it well, keep educating yourself. So I always ask people, what are some books that you would recommend, if there's anything, or different articles or columns that you read to stay up to date and constantly learn?
That's so funny. Like in net lease, and even when like I had started and I asked Glenn or the few other people on the team or just people in the space, there's like no specific book to net lease like at all. And just like even kind of real estate in general, like you just have to keep like looking up and trying to figure it out. The usual suspects and anything from an article perspective. And like it depends on what industry. Some people are focusing on one thing versus the other. So we're heavy in the private equity space. So subscribe to, when people are raising money, transactions that are happening, just opinions on the space and what's going on. Any of the newsletters for bankers in the space too, who are out selling businesses or whatever it may be. I'm trying to sign up to their list as well. It's everything. And I know that sounds kind of like a throwaway, but like I try to read as much as possible, even if it's silly things when you're trying to figure out like social commentary and what's going on. So like different articles and whatnot, but it's just, setting your Google alerts for like every single thing relative to what you're doing. And it might be 30 different things that you're kind of going through.
Yep, absolutely. I was going to say Google alerts. Exactly. I do that for my own market as well. So I 100% agree with that. Do you have any surprising or controversial thoughts about the current market happenings that you would like to share?
No, nothing surprising or controversial. I think it's the same thing. Like my biggest answer I gave is like, I have no idea what's going to happen. No one does. And if I was really, really good at knowing what was going to happen, I probably would be doing something else. Is kind of the easiest go away. But no, I think it's just a function of people need to be deliberate, and it's important to tell clients what you actually think something is worth versus what it's not. But no, I don't know. I think even most recently with what's going on with regional banks and everything else, like there's still what we're going to see as a ripple effect to our space, given that they lend so much kind of in net lease and in commercial real estate in general. I don't think we know what that's going to look like. If it was February, I would say that hopefully there's going to be some level of softening on rates at the end of the year, and maybe cap rates come down a little bit from where they were, not meaningfully. But we don't, right? Everything just keeps changing so quickly now. So I think it's just on a weekly basis trying to stay on top of where things are and seeing where it is, knowing where the debt markets are, and just being deliberate in what you're doing and honest.
Mm-hmm. I think that was as close to a crystal ball as we could probably
there's
get.
not, yeah.
So thanks for sharing that. Given your specialized background and expertise, I'm sure our listeners are curious about a few rapid fire questions that I'm going to ask.
Sure.
They don't have to be rapid fire answers, but I will just throw out a few questions for you. So first, if you were given $10 million today and had to invest it immediately, what would your go-to asset type be, location, and why?
Probably stick it in a money market account and wait a month and see if rates went which way they went. But we're the beauty of net lease, market agnostic on everything, right? And that kind of gets lost too. And being in New York or being in LA, like it doesn't need to be all coastal towns. There's great towns throughout all of America, and there's really good real estate throughout all of America, and rich suburbs and this and that, and growing communities and whatever it may be, or just the most popular restaurant in town, and there's a reason to buy that piece of real estate. So I don't always, we're pretty agnostic when it comes to real estate. Where would I invest it today? For $10 million, I honestly would probably break it up and try and do smaller slugs, like $2 to $3 million properties, and kind of spread it around. I still think quick service restaurants are going to be here for a long time. They obviously did really well during COVID. It's kind of a safe bet if you're buying the right credit. Drive-throughs are harder and harder to get, which we're seeing in a variety of different spaces. So there's long-term intrinsic value in there. There's tax benefits related to certain assets from a depreciation perspective. So car wash and just an industry that does really, really well as far as performance go. It historically has forever too. Did really well during COVID. One of the few tenants still paying, I guess, kind of going to a car wash was a treat for a lot of people then. And then the rest, I don't know. There's a lot of new development going on. There's people who need capital where yields are attractive. So, probably those two from an anchor perspective, and then something from someone's building a new oil change or a new gas station, or even we do a lot in the medical space. We do a lot of animal hospitals and things like that, where people love their pets a lot of times more than their own children. So they'll spend the money on it. So I'm not sure. You'd have to, look at it kind of piece by piece, but whatever the kind of best opportunity with some anchoring in it to make sure it's still safe.
And a lot of people got pets during the pandemic, so
exactly.
That's very smart. Appreciate that answer. Second one, and I promise this is not a trick question. What is your favorite tool to use on the job, and why?
I only use Crexi for everything. I send my emails through Crexi. We're on just being a broker. I'm sure you're the exact same way, just dealing with everyone, but I'm on my phone 24/7, right?
Yep.
So obviously I'm going to do my little plug for Crexi, my little shout out for it. But one of the quickest, easiest things for us when we're pulling things up, or two, if I'm out, if they're asking about something that we don't have listed or whatever it is, 9 times out of 10, it's on Crexi. Or when another broker's saying they sold a billion Burger Kings, and you go on Crexi and they have one listing, and usually it doesn't translate. So it's a quick way to kind of disprove people in a meeting as well. But we've invested a lot internally, so a bunch of different programs and everything that we're using. But again, I rely on my team a lot. So quite frankly, beyond just being on my phone and being on email or taking calls, there's our website, NNNpro.com. And then there's and we're using Crexi. And look, it's from the beginning. I think we were one of the first people that posted all of our listings on.
Absolutely.
And I've known Mike for a long time. There's a reason we did that in the first place, because you almost have to subscribe to a lot of the other ones just because it's kind of like an industry standard, but a lot of everything else has become a junk drawer of listings versus like actually selling something. So it's been meaningful, and the same thing, we see some functionality that you all are doing, and then we steal it and stick it on our website or whatever we're doing. But beyond that, like I'm not using a ton of things that are specialized. Like we have our proprietary CRM, we have our proprietary system for how we're tracking things internally, like on our MLS. That's not broad. But beyond that, like there's not a product type in the space that I really love more than I'm just on my phone like anyone else kind of is.
Yep, absolutely. The phone is the number one thing.
Yeah.
It's all about relationships in this business, making sure you're checking in and doing that. So amazing. And then third, what is the most common misconception about your job or the industry in general?
I think I probably tackle both with the same answer. Like there's like brokers considered a dirty word, right? In the sense of like we're in net lease in particular, we're dealing with a lot of bankers, with a lot of banks, with a lot of private equity, with a lot of publics, like I mentioned, with private, with REITs, and we're a part of the capital stack as much as anything else, and we're an advisor that's extremely important and integral to what it is. And it just becomes kind of like this toss away where people don't think it's glamorous, and the times it's not. But I think conceptually, like there's the negativity around it, and like that's what we've tried to reinvent around when it comes to our group and our team and what we're doing, and making people feel pride in what they're doing at the company, and that we're wholesome advisors. And I tell people the broker when they ask and what I do, and sometimes they ask if I can sell their house. But beyond that, like there's nothing, like every job's a job, and no job's better than another one. And there's plenty of people who are selling houses and making more than everyone else in the room. So I think there's this negative word around broker, and that people are just trying to sell things, which is not what we do. We try to build relationships. We try to create the best possible outcome for whomever our client is. And sometimes it's both of them. We're on both sides of it and figuring out, what makes sense. And so I think the common misconception is that people are just trying to drive towards getting a commission check or something else. And the people who are good at their jobs and that we interact, and people who aren't a part of our firm either, a ton of relationships and friends, and we co-broke a lot, and like a lot of people. And that's also kind of how we're different too. And a lot of people don't co-broke. Like there's people who care about their clients and what they're doing, and you should take pride in what you're doing. And it's a way of being able to start with nothing but a phone call and no salary or whatever it may be, and build something for yourself, for your family, and build relationships and people who say thank you and different things. And so I think that's kind of the biggest takeaway. And like anyone who's listening, like there's nothing wrong with going into brokerage and sales, and there's a tremendous opportunity for you. And I think that's kind of what gets lost. And the same, our clients thank us all the time.
Absolutely. You become that friend and that advisor, and you're the honest salespeople. I know maybe that sounds like an oxymoron sometimes. I mean, that's definitely a misconception in sales in general, but if you're a good person, people are going to remember that, and people want to work with you based off your brand. So I absolutely agree with that. Awesome. Any other parting words for our listeners? Any advice that you would give? Maybe pretend this is your younger self, or anything that you want our listeners to know.
No, I don't think there's anything else that stands out. Like I've always just been a big proponent of this space, and this industry has so much opportunity, and the landscape is so wide. Like anything's a net lease, and for people who don't know, it can be the bank on your corner, or it can be the deli, it can be the 2 million square foot industrial facility that's making canoes. Like it could be anything, and you don't realize like how all encompassing it is, and how much space there is to carve out your own business and grow and do that. And so, that's what I would say. Like I didn't want to go down a traditional route. I was joking before, but I'm, extremely happy that I didn't go to law school and I did this. And there's lawyers who are happy that they're lawyers, and there's not, and that's how it is. But I wanted something that was entrepreneurial and that I can go into, and that I knew if I dedicated myself and worked hard, that there's not a lot of barriers. There's not people holding you back. And I'd say like at our company, particularly when I started as a junior analyst, I'm the COO and I'm his partner, and own the business with him. like he really likes seeing people succeed, and I really, really like seeing people succeed. We take pride in that at our company, and people doing that, and that's what the opportunity is. So like that's the only thing I would encourage anyone to look at this and not think of it as kind of a toss away or a backup plan or backup plan is the only piece, because there's a lot of people who are really, really successful in it and who've done really well for themselves.
For sure. I mean, I took that away as an absolute opportunity. I know it's cliche to say the sky is the limit, but that's kind of what you just told me. So I'm excited about that. And I know that our listeners will take that away as well.
Great.
So Nico, thank you so much for sitting down with us today. It's been an absolute pleasure. I know you're very busy, so thank you. If our listeners want to get in touch, how can they reach you? Email, website, give us all your deets.
Website has my email and my phone number, but email, I have no social media. Email is ndepaul at nnmpro.com and DEPAUL. And then they can also just call me or message me on that, whatever they want to do. But no, they probably won't find me on Instagram or TikTok.
We love that. We absolutely love that for you. Awesome. Well, thanks to everyone who tuned in today. If you enjoyed this episode, do not miss the next one. Visit go.crexi.com/podcast and sign up to get the next episode delivered straight to your inbox. Of course, you can also subscribe to the Crexi Podcast on your favorite podcast app and check out our YouTube channel for video recordings of each episode. Take care and be sure to tune in next time.